Good day, everybody. Welcome to everybody out there in VV Nation, whatever time it happens to be for you out there in the world. Hope everybody's having a great day, staying safe and healthy. I'll just check the chat here, make sure everybody can see and hear us. We do have a bit of a delay, but folks, want to welcome you to your VectorVest International User Group Forum for April. So we're April 6, 2024. Welcome everybody. Thank you for sharing some of your weekend with us, coming out and joining us here. We do have a packed show today, so I'm going to start moving the slides here in a minute. Let's just see. Yeah, so I'm seeing Bob T. I think I was seeing folks from Amsterdam, Ash, and Calgary. British Columbia with Pamela. Hey, Pamela. There's Erwin from Saskatchewan. All right, so let's get moving here. As I mentioned, a packed show. Please make sure your computer speakers are turned on to hear the audio portions of this webinar. And of course, this being on YouTube, the recording will be archived on VectorVest YouTube channel and available shortly after the webinar. All right, so for you folks that are wondering if this is being recorded, here's our risk disclaimer. As everybody knows, there is risk in investing. Everything you will see in here today is provided for educational purposes only and should never be considered as investment advice. The information is designed to empower you to make your own investment decisions, and these decisions are yours and yours alone to make. All right, so with that out of the way, we can move on to the agenda. As I mentioned, a packed show. It's a pleasure and honor for me, folks, to be hosting this webcast for you today. You can see we're going to do a global market review. I'm joined by Jerry D'Ambrosio, Manager of Educational Content here at VectorVest. All right, so he'll be providing some trade ideas and probably what everybody is waiting to see. I know there's been much excitement since the Nets Turbo and Nets-Nitro trading systems have been announced. So our keynote presentation today from none other than Mr. Don Reitsma is Understanding the Nets Turbo and Nets-Nitro ETF trading systems. So this is my first chance being able to meet Don myself. It's been an absolute pleasure. All right, once he's done, we'll adjourn for the day. That'll be somewhere around 12:30 Eastern time. All right, so let's advance. We'll get into the slides here and we'll get this show moving. We'll start with myself, the global market review. We can go onto the slides here, Joey. So I'll start here with Canada and the US. So you can see in Canada, we've got a color guard needle 2 ticks into the green. Our color guard is somewhat bullish. VectorVest advocates caution when buying stocks at this time. Okay, and you can see our extended version of the color guard there. Not a lot of red in the Canadian market left in that extended version. You can see we have 1 red left 2nd of April. But overall, Friday finished off with 2 greens. Our MTI is at 1.22. So in the Canadian market, when that MTI is above 1.20, we do give the warnings that this market may be toppy, may be searching for a top, and downside risk may outweigh upside potential. However, we also have a divergence between price and RT and BSR in the Canadian market. So we are in a down-up situation, and you can see the status of all of our calls in the Canadian market right below. So you can see our confirmed call is green. That's been a long-running one in the Canadian market since the 14th of November. The DEW has been up since the 3rd of November. Green light buyer just went neutral on the 4th, and our primary wave turned down on the 4th as well. All right, so if we get into the US market, you can see their market time engaged needle 1 tick into the green. Color guard is mildly bullish. VectorVest advocates caution when buying stocks at this time. We look down at the top row of lights. You can see 2 yellow lights and 1 green light from Friday. A pretty good day on the US market there as well. But as you can see in all of our markets, the BSR especially and the MTI to a certain extent have been jumping around. You can see levels in the US BSR on the 28th of March at 1.72. And within 2 sessions, we were down to 1.08. Next session up to 1.22. So you can see signs of toppy market conditions for sure. So in the US, their MTI is at 1.14, down up situation and confirmed up. You'll see all the status of our proprietary market timing signals in the US market. Confirmed calls have been up since the 20th of March, the DEW since the 19th of January. Green light buyer went neutral on the 1st of April, and the primary wave turned down in the US market on the 2nd of April. All right, at the top of each of the images of the color guard, you can see the year-to-date returns. So Canada at 6.10%, the US at 5.61%. Moving on now to Australia, you can see Australia year-to-date at 4.57%. And you can see their market timing gauge needle 1 tick into the red. Color guard is mildly bearish. VectorVest does not advocate buying any stocks at this time. It looks like their color guard looking a little closer to Canada's than the other nations. A couple red lights hanging around there in the BSR column. You can see they closed Friday with 2 yellow lights, 1 red light. Their BSR is down to 0.58. MTI is at 1.08. They're in a down-up situation. And if we look at the status of our proprietary market timing signals there, the confirmed calls have been up since the 17th of November in the Australian market. The DEW since the 8th of November. Green light buyer went neutral on the 2nd of April, and the primary wave went down on the 3rd of April. If we move on to the EU, you'll see their year-to-date return of 5.54%. And a market timing gauge needle straight up into the yellow in the EU. Color guard is neutral. VectorVest does not advocate buying any stocks at this time. So the guidance has been the same across all of the VV nations here. We've got 3 yellow lights in the top row. MTI sitting at 1.48 in the EU, down up situation. And if we take a quick look at the status of our proprietary market timing signals there, you can see the confirmed call's been up since the 14th of November. The DEW since the 24th of January. Green light buyer went neutral just on Friday on the 5th of April, and the primary wave turned down on Friday as well. Okay, moving on to market timing graphs. Here's Canada. All right, so we're going to run through this pretty quick. We are seeing a few differences across the country. So in Canada, we still do have that bearish divergence between price of the VectorVest or Canadian VectorVest composite and the MTI. The bearish divergence has been nullified when it comes to the buy to sell ratio in the RT in Canada. I believe we're the only nation where that's happened. So we have put in higher highs on the buy to sell ratio in the RT now, but still do see that bearish divergence when it comes to price and the MTI. We had a pretty bullish day on Friday, as you can see from that last candle on our graph. Here's the US market. You can see those bearish divergences still in place with all of our proprietary market timing indicators in the US market. All right, so price making new highs. None of our indicators able to put in new highs at this point. You can see the US market did put up a bullish harami, bullish candlestick pattern. There you can see right at the end of the graphic here. So we'll be looking for confirmation of that on Monday with the market hopefully moving to the upside. Here we have Australia. Okay, and you can see the same bearish divergences between price action there and all three of our proprietary market timing indicators. And you can see for Australia, and you'll see the same thing for the EU. They actually didn't enjoy the bullish day that we did in Canada and the US on Friday. All right, so you can see the red candle there. And here you have the EU. Again, same bearish divergences. And again, you can see that red candle on Friday there. Now that's an open red candle, but the market was still lower overall. All right, so now let's take a run through. This is our monthly comparison of the global markets tracking ETFs. You can see February on the left-hand side. You can see who led the way in the month of February. And then we have March on the right-hand side. You can see there's quite a turnover here. We do have a few that have maintained their position, like Italy. Actually, it's in the same position there in fourth, but you can see a pretty good change with Peru and Spain near the top. You can see Canada, Europe, the United Kingdom coming in the bottom there as well. Overall, though, you can see over the February, we had 20 winners, 0 losers here, and in March, 39 winners, 4 losers. So pretty good months in February and March. And here's March. So the left side is the same thing we saw on the right-hand side of the previous slide, but we have the year-to-date on the right-hand side here. So you can see Turkey and Peru coming out in the number 1 and 2 positions over a year-to-date here. Okay, so that's the global market tracking ETFs. Next, we'll look at the sector ETFs. And just in case anybody's wondering, these are available in the US software in the watch list viewer under the cherry picking folder. Okay, so you can see the 2024 year to date. On the left-hand side, semis at the top. We will see some repeats in the last 10 days, but semis were at the top. You can see oil and gas, exploration, energy select, North American natural resources, and communication services rounding out the top 5 year to date. Now, if we look at the top or the 10-day delta, now you can see all these commodities that have been moving. So we've got GDX, gold, a gold ETF in the US market, spotter metals in second, and then you can see oil and gas, XOP, XLE in there again, and iShares North America, IGE, rounding out our top 5. Okay, so that's the wrap up of our sector ETFs in the US software. Next thing we're going to cover here are the VectorVest essays from yesterday. So the Around the World VectorVest essays, another great week of essays here, folks. I hope everybody was able to get out and start reading these. I do have them summarized here. So out of the US from Angela Akers, another great essay, really good here, the best of both worlds, how to use VectorVest to find stocks with the best combination of VST for capital appreciation and YSG for income. Out of Canada, Stan Hellers was entitled Unlocking Profit Potential, What the Performance Graphs Are Telling Us. And folks, this is another great one here, how to use VectorVest Performance Graph to capture investment opportunities in ETF pairs. Stan has a very good way of using those performance graphs in checking out the bull and bear ETF pairs. So really good to be able to check that one out, no matter what country you happen to be sitting in. Next, out of the EU, we have Susan Hayes Culleton, whose was entitled ETF Viewer. So how to use the ETF Viewer, and she used it with a comfort index indicator to find investable ETFs in the EU market. And then from the land down under, from Robert and Russell Markham, the Australian essay was entitled, Will the Share Market Continue to Trend Up? So how to use VectorVest to stay on top of significant changes in market trends. Okay, so that's all your essays. Hope everybody knows you can log in with the desktop version to all of the different countries. Go in and check out the views and see whatever essays or review whatever essays you'd like to review. All right. Here out of the US, we've got the April Almanac. All right, so I'll leave that. And basically, folks, that'll be in the slide deck here. It is in the US views as well as part of the essay, so it can be read there. But as most people know, November to typically April are the best months to be investing in the market. And the roundup here basically tells us that, with the addition of, you can see with the 7 presidential election years during VectorVest history, April has a 57% chance of being a winning month. So we have that added information. That is the exact same percentage as April in general. All right, so that's the April Almanac. Okay, so that's it for me, folks. We're going to move on to Jerry D'Ambrosio next, Manager of Educational Content, and he'll be providing some hot off the press trade ideas. Take it away,
Thank you, Rick.
Jerry.
Appreciate it, my friend. Thank you, Rick. Good morning, everybody. Welcome to our Saturday International User Group. My little segment here, I'll be going through just some trade ideas. And you guys remember from the disclaimer, these are not suggestions or recommendations. I'm going to do my best in teaching you kind of what I'm seeing, right? Keep teaching you the setup that I'm seeing, and so that in the hopes that you apply these setups to any stock moving forward. These are examples. I think some pretty good ones here. And we'll start in the U.S. product. So I'm in the U.S. product now. The 2 examples that I want to show you guys here today, MOD and AMD. Familiar with these 2 companies. Now, with all of the trade ideas that I'll show you guys here today, in all the different countries, Canada, EU, and Australia, we're going to start in the stock viewer. We're going to start with our overall analysis. Then we'll get into chart analysis. So, you always want to favor buying good stocks. You try your best to do that. There might be some exceptions if you see an opportunity for a shorter term speculative trade. I have 1 or 2 of those in this bunch as well. But these 2 stocks, MOD, AMD, both in the U.S., both very good companies. You really want to start with your price to value comparison. MOD is undervalued, AMD is overvalued. Okay, overvalued stocks aren't necessarily something that you'd want to shy away from, as long as the fundamentals are good. So RV and RS, let's start with AMD. This is the overvalued stock. A lot of these chip stocks, these tech stocks are overvalued. So no different here, no difference with AMD, but great upside potential. RV above 1, well above 1, really safe stock. RS at 1.48. Now it's in a downtrend. It's not quite in an uptrend. RT is at 0.92, although it's got a good VST score, good CI rating as well, good earnings growth, earnings per share. We can continue to move from left to right. And I will generally stop in the earnings growth to earnings per share columns here. Both very good. Todd Schaefer did a presentation this week on earnings growth, was a part of his presentation. He made sure to to say that, you want to favor stocks with an earnings growth rate that exceeds the hurdle rate. The hurdle rate is the current sum of interest and inflation. Now that's always going to change from quarter to quarter, year to year, but anytime you're looking for a stock, you want that earnings growth rate to exceed the hurdle rate. Again, the hurdle rate is the sum of interest and inflation. Both of those, and right now that's about 8-9%. Both of these stocks, MOD and AMD, have earnings growth rates that are greater than the current sum of interest and inflation. So we're in good shape there. Now MOD, this one's the undervalued stock. Fundamentals are fantastic. RV above 1, RS above 1. Now this stock is in an uptrend with an RT of 1.64. Fantastic CI rating of 1.79. So we're fishing in a pretty good pond here with both of these. So that's where we want to start. I'm going to open up my chart. and kind of explain the setup here. The indicators that I have on this chart, we'll start with MOD. I'm going to change the indicators as we move from stock to stock. But MOD, you got a 20-day simple moving average at the top in red. You got a 200-day moving average in purple. You have volume at the bottom, and you have ADX at the bottom. ADX, by the way, is an indicator that identifies or measures the strength of a trend. Okay, it doesn't identify direction. It identifies the strength of the trend. When ADX is above 20, above 25, you're in a trending environment. When it's above 30, and the higher above 30 the indicator goes, that indicates a strong trend, a very strong trend. MOD is a stock that I actually bought in our swing trading coaching group portfolio a few days ago. I think it was today, Friday, maybe Tuesday or Wednesday of last week. The hard right edge that you guys see now is April 2nd. When was that? Today is what, the 6th? So April 2nd was Tuesday. Tuesday, we have a swing trading coaching group session. So one of the things that we do during those sessions is we look for trades. We look for trade opportunities. This was a nice setup. You can see recently. So first off, the stock is strongly trending, right? Going from bottom left to upper right. We could start with a 1-year chart and then, shorten our time frames. 1 year, 6 months. The stock is pulling back just recently off of a 52-week high, right? It pulled back to the 20-day simple moving average, which it seems like, if you look historically, it seems like that 20-day moving average has served as a nice support zone, right, over the last 4 or 5 months or so. So yet another pullback to the 20-day moving average. The 14-period ADX is above 30, so that indicates that the stock is strongly trending. So what I looked for, and I really like this reversal candle too on this day, on April 2nd, right? It's a red candle, meaning the close was lower than the previous day's close, but it's an unfilled candle, which means that the close was higher than the open. And in this case, on April 2nd, right at the high of the session. That's a nice reversal day, right at the 20-day moving average. We got classic follow through the next day, and I took it. And a lot of our members, our swing trading coaching group members, took this trade as well on April 3rd. Fast forward, that's exactly what you hope to happen when you take a trade like this, or when you recognize a setup like this. Setup meaning a pullback to the 20-day simple moving average, and then a retracement off of it the following day, a move higher than the previous day's close. You could see that happened again on the 3rd. Really nice setup. I don't think it's too late. I always get that question, is it too late? I don't have a crystal ball. I don't know if it's going to be too late or not, but I do like the move off of the 20-day moving average. I had set my stop. This was a very low risk trade for us. I set my stop right below the swing low, right below the low of the KISS candle. This was a trade where I was actually able to leverage up a little bit, buy more shares, because it was such a low risk trade. I had set my profit target in this case at the swing high. We're not quite there yet. But again, I like the move off of the 20-day moving average. I like this setup in general. Anytime I see, price pulling back off of a 52-week high, landing and pulling right back to a 20-day moving average with an ADX above 30, I know it's a little bit below 30 now, but that's okay. At the recent swing high, it was above 30, and that's what I really look for. This is called the Holy Grail setup, by the way. This is a setup that we teach in our Trade Like a Pro course. If you guys have taken that before, you know it. But one of my favorite short-term swing trading setups. It's a good company, right? We already analyzed the fundamentals of the company, but I really like the pullback to that 20-day and retracement. So real nice setup here with MOD. Now AMD is a little different. If you remember from the spreadsheet, AMD is in a downtrend, and you can see that yes, the stock is in a downtrend. The RT had just crossed from above 1 to below 1. That's of course unfavorable, but technically speaking, I'm seeing something rather favorable. If I put on support and resistance, you can see where the stock price just recently stopped falling, right? Didn't it stop at the same level that it stopped back here at about 162 and change? So this is more of a reversal setup than a continuation setup like we saw with MOD. The stock price, has pulled back quite a bit off of 227. 227.30 was the high on March 8th. But it's nice to see and encouraging to see that the stock price just recently, after Thursday's sell-off, settled down right in this 162.19 support zone again. Okay, so this is a trade that I would look to take on Monday if the market continued to move higher, right? If the market continues to move higher, we had a really nice day yesterday. But if the market continues to move higher, again, I'm in the U.S. product, so this is a U.S. stock. Market continues to move higher. Here's what I would look for in terms of a confirmation level. Rick mentioned that the VectorVest composite formed a bullish harami. This stock, AMD, also formed a bullish harami as well. Bullish harami is a 2-bar candlestick reversal signal. First bar is a filled red bar. Second bar is an unfilled green bar that is completely engulfed by the previous filled red bar. The confirmation level of this bullish harami is the midpoint of the filled red bar. That would be where I would wait for the stock price to move above before I would take this one. Okay, what would that also mean? It would also mean that the stock is truly now retracing from this support zone. Technically, we're still right in that zone, right? Maybe a little bit above that 162.19 zone. So a move above, I'd say 174, that looks to be the midpoint. I mean, you could calculate it if you wanted to, and I think that probably would make sense. So to truly find the midpoint here of that filled red candle, the open price was 182.92. That's the top of the body. The close was 165.83. What's the midpoint of that? So we're looking at about 17 bucks, $8.50. Let's subtract that from the open. We're looking at about 174, right? Right here, right around 174. That's the midpoint of the filled red candle there. That's where I would need to see price move above. I would not, if it does retrace off of support and confirm the bullish harami, I would not let it go any further below support before I would exit, right? So that is where I would set my initial stop loss. In terms of a profit target, you could set it at the swing high. What I would also look to do is double my risk. So figure out what your risk is. Let's say best case scenario, you get a 174, 175 cost basis, right? 162 would be your initial stop loss. So that would be 12 to 13 bucks risk. I would double that and set that as my initial profit target, 24 bucks. So I'd set it right about 200, and in that case, that's right about here. So you're doubling your risk, and that's how you would set a profit target. Okay, good setup here. I like both of these for the U.S. market. Again, one I'm in MOD in our swing trading group. I was able to leverage up again, buy more shares. Nice 4 or 5% gain so far. The swing high is what I used as my initial stop loss. Okay. All right, let's get into the Canadian product. Whoops. And we're going to go through the same analysis here. Two stocks here, Sprott Physical and Uranium Royalty. Both stocks, well, I'm sorry, let's start with U.U. U.U, Sprott Physical, hope I'm pronouncing that correctly, is undervalued. Got great RV, excellent RV, 1.68, RS at 1.19, so fundamentals are good. This stock is not in an uptrend either. It's got an RT of 0.91, but the VST is good at 1.26. It's got a good CI at 1.64, good earnings growth rate at 37%. So fundamentally speaking, U.U is a little better than Uranium Royalty. This one's a little overvalued. RV is good. That's always good, right? That's always favorable. 1.10 with an RV. RS a little bit below 1 at 0.96. The stock is also in a downtrend, and this stock actually has a sell rating. So let's take a look at both of the charts. Both of these guys are NPI setups, NPI near perfect indicator setups. So we're looking at a 1-year chart. We have at the top here, we have a 5-day moving average on our stop price. We have the 40-day moving average on our stop price. We have a 40-day moving average on RT, which is in red. We have a 5-day moving average on RT, which is in green. The signal with the NPI is simply the 5-day moving average on RT crossing above the 40. You guys can see that that happened yesterday. Okay, that happened on Friday. Now, in terms of an entry, I would wait for the stock to break above 29.46 in terms of a specific price zone where I would need to see price move to before I would take it. I wouldn't just take it on an up day on Monday. I would want to see the stock continue to move higher. It's in an emerging uptrend, isn't it? Downtrend seems to be over. You got a recent new higher high here, higher low. Let's make sure that pattern continues before you take this one. But it is encouraging, and I like this the NPI setup where the short-term moving average on RT is crossed above the 40, and it's taking place. That crossover is taking place at a valley, as opposed to, and I don't generally like to take trades or these. I look for the NPI setups, guys, where the 5-day has crossed above the 40. And the indicators have been below 1. This is a setup as well. So looking back, kind of in this area here would be a nice area as well. I know they're above 1, but the 5 period recently crossed below 1 here. That's a good signal. Nice new emerging trend. That's a good signal, right? Where the indicators are at a valley as opposed to peaks. And the same goes for URC. Okay, it's got a sell rating. Both of these, I think, are a little bit more bottom fishing type plays, but they're both exhibiting these nice NPI signals after a pretty significant pullback. Both of these stocks, they were, well, U.U was a buy rating. You could see the transition from a buy to a hold to a sell. Now we're back to a hold. If the stock continues to move higher, if it breaks above the recent high there again, which was 29.46, this stock will get a buy rating again. It's just gotten, the RT has to go above 1, which will likely happen, right? If we continue to see this upward movement and the emerging trend mature. You guys with me there? So the RT is a little bit below 1, but you could see it's bottomed out and moving in the right direction. RT goes above 1. Price continues to pull away from our stop price, which would be the case if 29.46 is broken. It'll eventually get a buy rating again. But I do like both of these setups for Monday, as long as the market continues to move higher. And of course, the stock. Now, in this case, I said 29.46 is my confirmation level. For URC, you could see the crossover, the 5 crossing above the 40 there on RT. I would use 371 as my confirmation level for this one. This was just the recent high just a couple of days, just on Thursday. Okay, these are both Canadian symbols, guys, by the way, both Canadian symbols in the Canadian product. Okay. All right, so those are the two Canada stocks. Let's go to Europe first. Oops, come on. Okay, there we go. All right, RWE.DE and A2A.MI. Let's start with RWE. Undervalued. Good upside potential, 1.28, very good upside potential. Relatively safe investment, 1.10 on RS. This stock is also in a downtrend, but it does have a VST above 1. I don't like the CI score, but the earnings growth rate is at 11%, which is good. Here's A2A.MI. This is a little bit overvalued. This is more of a speculative stock. I mentioned that earlier, where ideally you want to favor fundamentally sound companies. There are some times, though, when you see a favorable setup, maybe a nice short-term opportunity that you kind of disregard fundamentals and just look at price action and a more technical perspective. So this is a more speculative trade. This is not a trade, guys, the A2A or any stock with poor fundamentals that you want to invest a considerable amount of money in, right? This might be a smaller trade for you, not deploying as much capital as you would on fundamentally better companies. Okay, so if we graph both of those, so here's RWE. Again, the stock has gotten hammered recently. And the setup that I like is the fact that the stock does appear to be basing, doesn't it? It's pulled back quite a bit. It was recently above 40 bucks, transitioned from a buy to a hold to a sell. We gave it a sell at 34. It's currently a little bit above 30 now. But it does appear that the stock is basing, looking kind of searching for a bottom, right? Trying to find a bottom. And all this is, you know, it's almost like a triple bottom type setup. This is not a stock that I would trade Monday, but more of a watch list type stock, right? Did we say that this stock has good upside potential? We did, right? We said it was undervalued. We said it had good upside potential over the next 1 to 3 years, and it was a rather safe investment. Good company going through or went through a really difficult stretch there, right, at the beginning of this year. It's encouraging to see that the stock price has stopped falling at about 30 and a quarter. Now, I would need to see a significant retracement off of this $30.26 support zone before I would take it. And again, if you're one that trades the European market, maybe you're familiar with the stock, you're looking for an entry, I would look for it to go above, recent high here, $31. Oh, no, I'm sorry. Yeah, $31.83. That was the high of this red candle here. So imagine price moving away or moving off of this $30.26 support zone, breaking above that $30.83 high, and where does it seem like we're heading? It seems like we're heading higher. Now you might get a fake out, but again, I like the upside potential here. 30 and a quarter would be my initial stop loss. Okay. Support. 1 touch, 2 touches, 3 touches right in that 30 and a quarter zone. If you take this trade, if it goes above again, 30.83, you don't let it go any further than 30 and a quarter. So that's about 75. Maybe you double that to $1.50, and you're looking at maybe $33, which is right at this kind of right there. I would say 33 bucks. You guys see that zone right there? Happened to be the swing low back here in October. Price kissed that price on March 14th, hit a high of about 33, 32.91. So about 33 bucks would be where I would set a profit target for this trade. Remember, this is a more of a shorter term trade with good upside potential, appearing to have found a bottom. Okay, and then the other one, very similar, A2A.MI. It's currently got a hold rating, but watch. I mean, look at this. I'm sure you can see it. You could just clearly see support, right? Clearly, 1 touch, 2 touches, 3 touches, 4 touches, 5. Working on our 6th touch at about 162. Another one where you would put in a watch list. A breakdown below 162 is extremely bearish, and wouldn't be something that obviously you would look for. A breakout above 162 with nice upside to overhead resistance at about 173. Another watch list stock. Keep this one, in a watch list. If you get a nice retracement off of that 162 zone, that's a really favorable setup. Really favorable setup. Okay, and then finally in AU. AU. Center Group, REA Group. Start with SCG.AX. Undervalued. Price of 328, value of 368. Undervalued. RV at 1.27. RS at 0.98. So good upside potential, a little bit below average safety rating. Good RT though, so the stock is in an uptrend at 1.25. VST 1.17, above 1. It's got a buy rating, good earnings growth. REA, this one's a little overvalued. Upside potential is a little bit below average, but it is technically a very safe company, very safe stock. 1.35 RS. RT just a little bit below 1. We'll take a look at the chart though, because you know with RT, that's an indicator that you really have to not, of course, see what the value of it is, but more importantly, where's it coming from? So if it's at 0.98, was it at 0.6 2 weeks ago, or was it at 1.4 2 weeks ago, right? So let's take a look at the charts here. All right, love this setup. This is similar to MOD, right? You got a 20-day, let me put it the 20-day simple moving average. Actually, yeah, we'll put it. $20-day EMA. Now, price recently has pulled back. It's still got a buy rating, but it's pulled back off of a 52-week high. 52-week high was about $3.42. Nice strong trend. Pull back to the 20-day simple moving, 20-day EMA in this case. Now, because price is at a 52-week high or just off of a 52-week high, all of your other time frames are going to be bullish. So if you're someone that likes to use moving averages to determine your different trends, short-term trends, midterm trends, long-term trends, right? Your long-term trend indicator, your long-term trend moving average, the 150. Stock price is above it, the 150 is sloping upward. And the same goes for the 50-day moving average. That's more of your mid-term moving average. Price is above it, the moving average is sloping upward. There's your 20-day EMA, your shorter-term moving average, which is really your trigger moving average, or the moving average that you're gonna pay attention to consider, or when to consider taking the trade. So the recognition of price above the 50, above the 150, both of those moving averages sloping upward, that's fantastic. You know the stock is in a nice midterm uptrend. It's in a really strong long-term uptrend, but of course it's pulling back. You got a little bit of a short-term pullback here, right at the 20. This is another bullish harami, right? Filled red candle, unfilled green candle. I'd use the midpoint still at about 330 is where I would make sure price moves above before I would take this one. Okay, that's the midpoint of the filled red candle there. Again, that's the confirmation of the bullish harami. Confirmation of the bullish harami is either the midpoint of the filled red candle or the close of the unfilled green candle, whichever is higher. In MOD and as well as this one, the midpoint of the filled red candle is higher than the close of the unfilled green candle, which is our confirmation level. Okay, so Monday, you got a nice move away from the 20-day EMA, a nice move above 330. That's a good setup here. Okay, we'll take off a few of these moving averages here. This is more of, again, of a reversal play, very similar to a few of the other stocks we were looking at, right? Clearly, the stock has found support in that zone, right? What zone is that? 175. In this 175 zone, we have 1, 2, 3, 4. We'll call that a fifth touch just a few days ago. I would need, again, this is more of a watch list stock, but again, folks, these types of setups, what I hope you will do moving forward is apply this approach to any stock moving forward. Doesn't have to be this one. It could be any stock. If you see this type of pattern and this move back down to a support level where you've had 5 touches in the past month, it's a really strong signal. Wait for a move above 175 or really or above that zone, and you'll know when you see it. It's a strong day. It's a nice retracement. If I had to pick a price here, it's hard to say. I would look at the close of Thursday there. Close of Thursday would be my confirmation level with this one. 180, 195. 180, 195 would be my confirmation level for this setup. And it does look like there is some overhead resistance at about 190, and I would set that as my profit target. But this is a stock that's channeling, right? Range bound, moving from 189 to 175, bouncing back and forth. We're at the lower end of the range, and a good opportunity for some gains here back towards the upper end of the range. Okay. All right, I'm going to stick around, guys. I'll answer some questions. I know you guys had some questions in there. I'll stick around, answer some while Don Reitsma is delivering his what I know is going to be a fantastic presentation. I'm really looking forward to this. Just some clarity and some further explanation on the 2 ETF strategies that he and a few of our other subscribers had come up with that kind of stem from the original Triple Q's ETF trading system that we unleashed in Tampa. So this is really nice, modifications of those, a little bit more aggressive, but profitable, but so much more profitable if you apply it correctly. So Don, take it away, my friend.
I'll come off mute there. Thanks very much, everybody. Really great to be here. And I'll start sharing my presentation. We'll get right into it. Okay, so this is, I hope everybody can see my screen. Okay, great. It's called the NASDAQ Easy Trading Strategy, and you see the $ there. And yeah, I had, a lot of participation in this. I came up with the initial strategy and then had people pitch in like Ed Steed and Michael Ellis. Sorry, a bit of a frog. And they helped out as well. So kudos to them. It's really a team effort when we can come together and develop these systems and strategies. So go on here. Okay, so what we'll cover, what was my idea behind the net strategy? And really, getting into my head is not a good place to be because I think out of the box a lot. And then we, I'm going to show you the results. So what's the idea here? Is really to keep it simple. I don't have a lot of time to trade and sit like I did before, and that's all great, but I wanted to keep it simple, something like Bob Turnbull's strategy, a bull strategy, where it's you're not making very many trades. So I wanted to also trade one ETF at a time, just like the VectorVest strategy that was released. I thought that was really great. So minimal entry and exit rules, not have to really think about it a lot, that sort of thing. Use end of day signals rather than intraday. Bob's strategy uses kind of an end of week signal. I thought end of day would be really great. That way I could place my trades in the evening or be ready the next day. So trade, like I said, at the next open, and use a chart or automate the system, depending on what you have available to you. And the profit multipliers, and this is where it really comes in with using QLD, which is a 2X ETF, or HQU in Canada, although you'd follow the US system, and TQQQ, which is not available in Canada, but there are ETFs in Europe of that nature. So, and use a market timing signal. And really the idea was not just to have some rule for an entry point and an exit point. It really gives you more flexibility and hopefully a higher probability of success. And then the performance goals were really be more profitable than the ETF buy and hold strategy. So respectively, so if because a turbo uses QLD, I would want to see the turbo strategy beat out buy and hold by quite a margin, hopefully. And of course, I want to, I'm just a bull, and you put a system in front of me, and I'll be on it like a dirty shirt. And so I want to see if I could outperform the VectorVest triple key strategy. So I back test everything. If won't back test, I really don't like it. I like rules, so we go with that. And the idea was to get into the trade as early as possible, and something hopefully earlier than using the green light buyer RT kicker combo signal that's in the VectorVest strategy. So that hopefully gets me closer to a bottom. Stay in the trade and keep it. So what's the optimal gain that I'm going to want? And these are all basic principles that I've learned using VectorVest and all the great essays and everything else that have been written, and then keep losses to a minimum. So it's finding that loss solution as well. And there are a lot of options available. So sometimes you just have to keep working it. And then other possible parameters without cherry picking. And by that, I mean not adjusting a parameter by 0.01, for example, which got me out of one trade over 10 years that had a 20% loss. That's not the way to back test. Okay, so I don't cherry pick that way. And what I came up with really was using the confirmed call signal, and that sounds probably counterintuitive because it's a slow signal. It looks at 2 weeks of an up signal as a preliminary signal of a sustained uptrend, and if it's 2 weeks down, it's a sustained downtrend. And then you add in the BSR, going above 1, and you get your up signal, and then you get a confirmed down signal if it goes below 1. So it's slow compared to the other signals, but sometimes it's not. Okay, like last week we had a down up in 2 days, and that's just the choppy market. So it's for prudent investors and even aggressive investors, if they are selling stocks short and buying puts, which is not what this system does. So you can go to the source that I've shown here, and you can read all about it. So yeah, Nets is going to use a confirmed call signal, and it goes to cash when there's a confirmed down. So to me, that's a very conservative strategy to use. When I get a confirmed down, I really don't want to be in the market, except for super. Okay, so I'll touch on that quickly. So there's 2 parts. So part 1 is to get in early, and this is to buy QQQQ during a confirmed down signal. So the rules I have are, the 10-day moving average of RT is less than the 15-day moving average of RT the day before. And on the current day, the 10-day is moved above the 15-day moving average of RT. And RT is less than or equal to 1.12. So we're still in a positive uptrend, that way. And this is where Ed Steed came in and said, hey, look at, something like 1.01 or whatever. And I think that was the number. So we'd just be into an uptrend. So I did some testing with that, and I found 1.12 to be the optimal number. And it might sound kind of cherry picked, but I went back through a number of graphs, and it was just uncanny how I would see QQQQ get down into that range and then start to reverse. So I thought, well, I don't know why it does that. I don't need to know why it does that. I just know that it does it. And RT is a proprietary signal. So VectorVest is doing something real smart with RT as far as I'm concerned. So what does it do? It tends to offset the loss that may occur during a confirmed up signal, tends to do that sometimes, which is great. And it had a very low loss rate. I think they're only over the years, 7+ years that I tested, there were 2 losses. And I'll explain that in a bit. And it was something like 0.02 and 0.98 or something like that. So less than a 1% loss doing this. So it's really a high percentage trade. And, you know, occasionally you'll get a really good run on this of 20% or more. And it's, you know, really pretty simple to put into the Unisearch. And essentially what you have to do first is build yourself a watch list. And this is already available. The watch list is already available because QQQ ETF strategy, sorry, uses, you know, already has a watch list. I think it's QQQ copy, but I make my own. And I actually did this early on because I had to remind myself that QQQQ is a positive 1x NASDAQ strategy, ETF. So this is just how you build it. We can go through this, but I kind of already explained it. So very simple, just 3 parameters. And the thing is, you do need ProTrader for this part because of the moving averages that are used here. So this is just an example early on, 2016, of you know, how the system works. And we're going to look to buy somewhere in here probably. As you can see, you know, RT is already low. It's 1.05. So I know I'm below 1.12. So all I'm going to need really is to find that RT combo of, you know, being less than or equal to 1.12 the day before. And then on the current day, it's then, you know, or say the moving average is below or equal to my 10-day and 15-day moving average, and then the 10-day moving average is above the 15-day. So here we see that on this day, on the 2nd, we've got the 10-day moving average is 9.6 and the 15-day is 0.95. So it's above. And the day before, just take my word for it, they were both 0.96. And that kind of makes sense. But the graph is showing that the green is above the red here. And that's not actually the case when you look at it to 2 decimal places, which is what, you know, Unisearch uses and what is shown on the side of your graph. Okay, this is probably using 3 decimal points or whatever. So, you know, just look for these numbers. If you see that, you know, the day before it was 0.96 and 0.96, that's great. And what happened was the 15-day actually slipped. So it was going down, and I haven't gone through all the testing of why that is or how that might change. I just keep it simple. But RT for the 10-day was above the 15, so that triggered a buy signal. And as I mentioned, we're down at 0.93 here. So we're in a downtrend, and I haven't done any more testing of uptrends and downtrends. I've just tried to keep it simple here. So what happened was I bought on this day, on the next day at the open at 101.35. That's what the system says to do. But you could do this on the chart as well. Now, obviously, price kept going down, but I know I'm near a bottom, and that's okay. You know, trying to pick an absolute bottom, or always it's a reversal, is next to impossible. So what I thought was, well, I'm close to a bottom. I'm just going to stay in. So, you know, this is buy and hold. It has no stop to it on the first part. So I'm going to stay in, and I'm going to ride out this bottom, and then lo and behold, price comes back up again. And I didn't show the rest of the screen because I really wanted to focus on the buy signal. But price keeps going up. And what actually happens here, I didn't show it, is the green light buy or RT kicker combo signal comes on here or here somewhere. So I think the buy came on here, and the buy would be typically at the open, so somewhere in here. So I got a slightly better price than the GLB RT combo, even though it came in a little bit maybe too early. But overall, repeated this over and over again, ended up being an earlier signal and more profitable. So the second part of the strategy is to then, when there's a confirmed up signal, is to set my stops so I can protect my profits and get out if the market reverses, and then really turbocharge or nitrocharge the whole system. You know, so kick these in and really get going once I know there's a up signal in the market. So for turbo, it's very simple. Again, what I'm going to do is I'm going to sell that QQQQ position if there was one open during the confirmed down, and that doesn't always happen. And then I'm going to buy QLD once RT is equal to or less than 1.4. And again, this was through experimentation and looking back at the charts. And it was just uncanny how you would see this dip. So you get a pullback, you get a confirmed up signal, typically a pullback to somewhere below 1.4, and then it takes off again, which is kind of like what the market tends to do to confirm support levels. So that worked out quite well. Then I set a 30% gain and a 5% stop loss. So if it's just very simple, and I'm going to get out if either of those happens. Or I'm going to exit if there's a confirmed down signal. I'm just going to go to cash as I mentioned. And I just slipped in not to buy within 5 calendar days. And I'll admit this was kind of cherry picked. When I look back at it, I could only find one occurrence where that was actually a value, and it didn't make that much of a change anyway. So I've just left it in, but really I could take it out and just simplify it a little bit more. So Nitro, the only difference is instead of buying QLD, I'm going to buy TQQQ, which is the triple leveraged ETF. So the rules are exactly the same, other than I said a 50% gain as well. And just because TQQQ really moves quickly, and you know, I want to try and extend my gains as much as I can with that one. And then there's a 5% stop loss. So I'm really being conservative, I think, on the losses as well. You know, a 30% gain to a 5% loss. Okay, so I'm looking for a 6 times gain versus my risk, and I'm looking for 10 times with Nitro. So yeah, I'm being pretty hopeful, but I'm setting my hopes high. And I'm also going to just exit on a confirmed down signal. So that's the two parts to the strategy. So it's very simple. And as I mentioned, you know, I get the signal and then I open the trade at the next market open. Okay. And this one has the 5 calendar days again. So the one thing here is once I've had the trade, If I get stopped out or if I get my gain, I don't rebuy during that timing signal. This is really important. What I saw early on when we kind of started up the system and we're getting it going, was it was active, but it was well into a confirmed up signal already. So what would happen, we'd see is there'd be another RT of less than or equal to 1.4, and you'd get a signal to buy. Well, that's because you just started the system up. Well, that was maybe the second or third RT signal that had gone less than or equal to 1.4. And those would be later on in the confirmed up signal, and not something that I back tested, because I'm always looking for just the first one. So, once I went into the trade, I get my gain, I'm out. If it goes to a RT less than or equal to 1.4 again, it's not going to buy. Take your gains and be happy, and the late great Dr. Paul used to say, something to the effect of, you're never going to be happy with your trade. You either got out too soon or you got out too late. And in some cases you get out too soon, but that's okay. You got money in the bank. So the uni search is pretty easy for Turbo. Again, you need a watch list, and you're just looking for RT time as relative timing is less than or equal to 1.4. And for Nitro, you're using a TQQQ watch list, and just super simple to do that search. And you can do that with a graph as well. Just have RT on there and a line that shows 1.4, and then find the first one after a confirmed up. So it doesn't require Pro Trader for that part. So here's the trading system viewer. We've got Pro Trader on to use these. Good equity curves over the last year. Of course, Nitro a little steeper, more aggressive, but the downside can be more aggressive as well. Confirmed call signals rather than the green light buyer RT. The all-time is different. The QQQQ ETF trading system was from 2019, I believe. So, the all-time numbers don't really match that well. But over 1 year, it was pretty darn good. And then, the categories are aggressive. But I kind of question aggressive. It is in a sense that because you're using leveraged ETFs, but it's not in the way that we're actually using the confirmed up and down signal. So, we did get pretty amazing returns in these back tests with 615% annual rate of return, just astronomical. But we did have a drawdown of 10.5% so far this year. Just happens. And so the back test results, really, we just don't want to back test from the first, up signal after a big down, that sort of thing. Of course, because you're going to get bias from the market move, which is the market's moving up. So of course your system will probably do quite well. And that's great if you're just looking to beat, buy, and hold and find a system that way. That's great. But I want to see what happens in a downturn. I'm pretty conservative. I like to not blow up my account. So or suffer through major drawdowns and what have you. So how did it also perform compared to the QQQ ETF trading system? And what I'm also going to show you is I did one with QLD and one with TQQQ to try and say somewhat relevant to the trading systems. And then, of course, how does it do with buy and hold strategy? Because really, if I can't outperform buy and hold, what's the point? I'm just going to get used to having these drawdowns and, not frustrating myself. So here's the back test results over 7 years. And what I did is I this isn't the start date for the systems trading systems viewer. This is going back to the previous confirmed down signal, which was a great place to start because the green light buyer RT kicker combo signal that is used in VectorVest QQQQ ETF trading strategy uses green light buyer RT kicker combo, and that's a C down to exit. So we're in a confirmed down, everything starting at the same place. So here's that huge gain with Nitro and about a 25% maximum drawdown along the way. And, pretty amazingly, it had almost 70% winners. And I think anytime you can get much over 50%, you're typically doing pretty well in my estimation. And then there's 85 trades, so about 40 buys, so do the math. We're only doing a trade or two a month or every couple of months. Then, they use the TQQQ in the ETF trading system with the green light buyer RT combo and got about 2,000% return, but a drawdown of 45. So if we go down the list here, you can see for yourself the performance. But what really gets me is, what buy and hold was for TQQQ and QLD. You got a darn good return with the buy and hold, but you would have suffered through an 81% maximum drawdown. So to me, that's way blowing up your account any more than about 30-40%, and it's like I'm really nervous. And then the ones down at the bottom here, they're the other two strategies that are in systems that are in the strategy. And Super QQQ just resets a stop at a confirmed up. That happens as well with Super Plus, but it doesn't exit on a confirmed down. It just keeps looping through. So you get a really low number of trades here. I think it worked out to 33 if I counted right. So if you wanted to get close to buy and hold, that's probably the system that you would use. You get a little lower maximum drawdown than buy and hold here, but you get significantly better return. And if you go with more trades with Super Plus, well, you get better than buy and hold with a really low drawdown in comparison, over half, or less than half the drawdown. So there's Nitro on the equity curve, and with the confirmed up and down signals here. So it's done really well, obviously, but every once in a while you'll get this little cluster of confirmed up and down signals here. Usually, the market's getting toppy, that sort of thing. And I haven't shown the up signal here. Oh, sorry, it is there. And, that we're probably getting toppy here as well, which is what Rick mentioned. And here you get toppy. And the other thing I wanted to show you is what happened in 2022 graphically, as we kept buying and selling, but, and make some gain, and then the market would reverse. Here we made some gains, and the market would reverse. And, this worked out to about 11% loss for the year, and I'll show you that as well. But every once in a while, you just get these flat spots, right? And that is just what's happening there. Is you're just hitting your gain at 50%, and then the system stops, and you have to wait till the next up signal to start buying again. And then you, flatten out and get your stops, that sort of thing. So you just see these flat spots here that's just stopping you out sometimes, and you're not getting the full movement. So performance during a downturn and recovery, I wanted to show you quickly 2018 to 2019. That was a quick pull down in the market and reversal. Of course, the COVID crash, and then what happened in 2022, and then up to now with the market recovering after that. So in 2018, it was pretty, short time. So I went from the confirmed down to confirmed down plus 1 day, which would mean all the systems have exited. And Nitro comes up on top with 53%, but really not a lot of difference here. The using TQQQ would have gotten you a little lower drawdown. So everything reversed pretty well, except for buy and hold during that period. So the difference here is quite substantial. So really all the systems did very well at outperforming buy and hold strategy during that period. Now, just to show you what can happen with the confirmed down signal and buying QQQQ and why I didn't set a stop is, I thought I was close to a bottom, but obviously not. The system lost, was down 12%. But, being an optimist and believing that the market is reversed, it did indeed reverse. And I actually eked out a small gain here of 0.998%, almost 1%, before the confirmed up signal came on and bought TQQQ. And then went ahead and gained, hit the 50% gain stop and got out of the trade. And, a couple of days later, lo and behold, got to the peak of the market. And that's what happened here. So hit that 50% gain for Nitro. The high of the market was right there. And, in back testing, I take it in kind of 5% increments. I don't go 0.1 or 0.2 or something like that. So I'm messing around with 40, 45, 50, 55, 60 to see what is generally the best solution. And that's how I came up with the 50% gain. This one in particular just came really close, but overall, most of them tend to underperform somewhat. The market will continue higher for a time, but that's okay. I'm willing to take that gain. And if you want to be a little bit more conservative, well, you could change that. So I sold the next day. It was actually a down day. I didn't know that. Sold it at the open, and then hit the high, and then reversed, and then soon after there was a confirmed down signal. So if I hadn't stopped out, if I had used a 55% gain or something like that, or 60, I still would have gotten out of the position. A few days later, sure, I would have taken a bit of a hit, but it's a backup. So if you don't hit the 50% gain, you're probably going to get stopped out pretty soon anyway. So the COVID crash and recovery, this is kind of the odd thing is buy and hold for TQQQ just barely outperformed Nitro. But again, you had that 70% drawdown to get there versus about a 20% drawdown for Nitro. And then the TQQQ, if you use that with the VectorVest green light buyer RT kicker combo, it was over 200%. That's pretty good. But some reason we got to a max drawdown of 40%. So same with turbo down here, underperformed buy and hold, but had a really low drawdown. So this is the other aspect of it, is when we're using this system going forward, we don't know what the market is going to throw at us. So all we can do is, set our stops to, satisfy, what we're willing to risk and what we're willing to try and gain, and just work with that. And sometimes, depending on the time frame, depending on what the market does, buy and hold is going to outperform your trading system, and that's what happened in Nitro and Turbo here. But why did it do that? It was because the market really went on a big tear. It just really kept moving. So when you're limiting your gains of course, the market keeps moving up and it beats you. So, we just got out early with these systems, but that's okay because over time it pays out. So that's what happened here. Again, if I look at Nitro, I got a 58% gain coming out of the COVID low, moved up, got a 58% gain, and had this big long flat spot for like 2 months, and then got the confirmed down, and then could not get into another signal until here. This is the green up arrow here. Sorry, it's hard to see. And I got stopped out. That was kind of an odd time during the recovery. Got stopped out, but got back in, had another 52% gain. And the same thing happened again. I took a hit with the system. And then I think this is something like 25 or 30% gain here before getting stopped out. And the last one has been another 25 or 30% gain there. So, yeah, aggressive, but not as aggressive, as an aggressive move for 50% gain, 58%, but not as aggressive as the market was being. So that's why the market beat Nitro. So the 2022 downturn, I just wanted to show you what happened just in that year, and then we'll look at the recovery because it was a hard year, right? But Turbo, through the few trades that it had, 6 total buys, it only lost 5% compared to going down to buy and hold, where it was down over 60%. And then Nitro lost because it moves faster. It lost about 12%, 12%, same number of trades, but it was a 74% loss for buy and hold. So that's, makes it a lot easier to keep up with these systems by having a fairly good level of confidence that I'm not going to blow up my account. And then the QLD and TQQQ using Greenlight Buyer RT, dropped about 32% with those 40% odd drawdowns, and you'd have to go through that and take a look at it. So sometimes the signals don't get us out quick enough is what happens. So that confirmed down signal in a really aggressive market, we can get a big drop off in 2 weeks, and that's what really can hurt us. So that's another reason for having this 5% stop loss in there. It really helped out in this case. So then the recovery, what happened? Well, Turbo actually outperformed Nitro. A double outperforming a triple, almost unheard of, but it's happened. And then here's pretty normal, I would say. But the max drawdowns is what you're seeing during the 2022 times. But buy and hold are still underwater. So anybody buy and hold at 2022 has still not made their money back. In fact, the person holding TQQQ is still down 30%. And to me, that would be heartbreaking. Like, I can see the market moving, but I'm not getting my money back here. So what's going on? So this is another time when systems will really help you out. So there's Turbo in the downturn. Again, just rocking along the bottom and trying to get going, and then the market takes off, and away we go. And what I wanted to show you here was, here's a confirmed down signal, and I see I'm moving up. Well, this is QQQQQ, sorry, QQQ gaining as well until I get the confirmed up signal, and I sell QLD here, and unfortunately I got stopped out. But this is where that first part of the strategy can really pay off. And just one example, there are several of them, but every once in a while you'll get this 20-25% gain, and it really boosts your account, and then you reinvest that when you buy QLD, so that helps in the multiplication effect as well. He's got more money to invest. So I'm just about to the end here. So what I've got is, Turbo and Nitro outperformed the 7 years. Didn't always outperform, in buy and hold, but it, did well against QLD and TQQQ ETF strategy. It had lower maximum drawdowns, obviously, especially during the downturns. And like I said, the buy and hold just depended on the time frame, but over time, it certainly performed better. And the recoveries were really good after the downturn. And this is what I mentioned before about having prudent conservative characteristics. Is we don't get in until get aggressive until there's a confirmed up. And, we don't take another position if we get stopped out and going to cash when there's a confirmed down signal if we're still in the trade. Those are quite conservative approaches to trading. So you get the great gains with the conservative. And I think, to me, that's a real winner. I wouldn't say it's a holy grail, but certainly very appealing to me. But, it always looks good, but, systems don't always work like they used to. I think you can look at some of the trading systems in Trading Systems Viewer and portfolios that did very well in certain years don't seem to be performing. And it's not like they won't perform well again, just that they're not doing it now. You have to take a patient approach. I think with any system, you have to look at 3 years, committed to being in the system, and certainly back test it to get some idea of what could potentially happen. But it's a long game. And reflect on 2022. That's what the market will give you from time to time. And your system should be able to ride that out. It never lost more than 2 trades in a row with Turbo and Nitro, but not to saying it couldn't lose 3 or 4 in the future. We don't know. But it did pretty well over that 7+ years. So, like I said, don't expect to win. It might not even win the first 10 trades. I'm not saying with this system, it's really with every system. But be an optimist. You decide to get into it for good reasons, just keep going. And stops will reduce losses. But with a 5% stop, the worst trade was down 11%. Price gap down. That's just what happened. We got stopped out. But stick to the rule. And you don't always win. We lost 36% of the trades with Turbo and about 30% over the 7 years. So, get used to losing too. It happens. But, when you win, it pays off better. And like I said, you'll have losers. Thursday, was a loss. Got out Friday morning. The market reversed. Well, what's it going to do Monday? I don't know. And I don't care. I'm out of the trade. Really, sticking to the rules, getting out of the trade, licking your wounds or clapping yourself on the back is great. You've got cash in the bank and the market's not taking it away from you. When you're out of the market, there's zero risk. And don't throw $1 million into this system and and it's everything, right? Size, you can use multiples of Super, Turbo, or Nitro, but size it all. So, we're trading the NASDAQ 100 and it's like a stock. So don't lose more than 1% per trade. So, back test, go all in all the time and it looks great, but really caution against being too aggressive that way. So, follow the rules, and if you don't, it's at your own peril. And hopefully you've gotten something out of this presentation, and certainly happy to answer any questions. So thanks very much. And you also, sorry, you can see this on this this link as well. And this is one of the links where I get these great ideas from. Thank you.
All right. Thank you very much for that, Don. That was an excellent presentation. There's so many great positive comments going on in the chat. And a lot of thanks going out to Don, Michael, Ed, and of course, we can't forget Bob Turnbull for all the work he did on his BS strategy with the triples. So thank you very much for that, Don. Really appreciate that. I think everybody out there really appreciated it as well. And yeah, folks, looks like we're right at about time. So let me just share out my slides here. And I was just looking to see if there were any other further questions, but I did want to mention that we did have folks that were responsible helping Don with this system, answering questions. So thanks for that as well. They got covered off really well in the comments. So folks, as usual, we'd like to thank you for coming out and sharing part of your weekend with us. Thanks to Don for that presentation, and thanks to Jerry for joining us here as well. And you're welcome to everybody who is saying thanks out there. I'll take us into our final slide. So thanks for watching. As usual, if you have any need for assistance, you can reach out to our product support and training folks at 1-888-658-7638. We've got the local US number there too for those that may need that. Our international number is over on the left-hand side. As mentioned, because this is being broadcast on YouTube, the replay will be available on the YouTube channel immediately following the webinar. All right, there's also emails at the bottom for support@vectorvest.com. And if anybody has any ideas that they'd like to see in upcoming VectorVest International User Group forums, we've got the email address of Ray Clark, so rayc@vectorvest.com at the bottom. All right, so thanks to everybody. Thanks, Joey, and everybody else. Appreciate it. Everybody stay safe and healthy, and we will see you again at the next international forum. Take care, everybody. Bye for now.